Now that we have all the background information, we can look at our financial statements. There are 4 financial statements, and this is the order in which they are prepared. The first statement we prepare is our income statement. The second one is called Statement of Retained Earnings. The third statement is called a balance sheet, and the fourth one is called the Statement of Cash Flows. You have to know the 4 statements and also the order in which they're prepared. Again, income statement first, statement of retained earnings second, balance sheet third, and statement of cash flows the fourth. Whenever we are preparing our financial statements, we prepare it for a certain period of time. So we typically look at a period of 1 year, but there are companies that produce financial statements quarterly and monthly. Whenever we prepare a balance sheet, the balance sheet is prepared for a point in time. So a balance sheet, you can think of it like a snapshot, taking a photograph of what the company's assets, liabilities, and stockholders' equity components are at a point in time. Normally we look at the end of a period, the end of a year in this case. However, you can take a look at any point in time and prepare your balance sheet. The other 3 financial statements, the income statement, the statement of retained earnings, and the statement of cash flows, are prepared for a period of time. So in this case, we would prepare them for a period of 1 year. Again, companies report financial statements quarterly and sometimes monthly. In that case, the income statement, statement of retained earnings, and cash flow statements would be prepared for a quarter or a month. Now let's take a look at each individual financial statement. The first thing we're going to take a look at is the income statement. Sometimes you'll see that called the statement of operations, but most of the time we call it the income statement. The income statement reports 2 main categories: revenues and expenses. Later on during the semester, you'll see that we have revenues as well as gains and expenses as well as losses. And this is the statement that shows the bottom line of the company, basically how the company performed, whether they made a profit or a loss. We call that a net income or a net loss for the period that we're looking at. Net income is the most important item in the financial statements. If you were an investor or a creditor, they would want to see whether the company is making an income or a loss before they decide to go ahead and invest in the company or lend money. These external users will take a look at the income statement to see how the company performed during the year. This is what an income statement for a company looks like. Be sure to write down all the different components, or you can print out your PowerPoint and note down the components and bring it to class, because you will need it when we do our in-class exercises. If you're doing an online class, be sure to keep your PowerPoint with you when you're doing your online homework. I know this looks complicated, but really all this statement has is revenues and expenses. They're just formatted differently. And in this chapter, all we are looking for is to see whether you know where everything fits. So if I tell you it's a revenue, you need to know that revenues belong in your income statement. If I tell you it's an expense, you need to know expenses belong in your income statement. And where it belongs is just what this format will tell you. Whenever you're starting to prepare your financial statements, every financial statement has 3 things that you always have to start off with. The headers. The header information will always contain the company name first. So in this case, the company name is ABC Corporation. The next item would identify what statement you're looking at. So in this case, we're looking at the income statement. And the third item will show you what the time you're looking at. So the time frame. Remember, our income statement is a period statement, which means we prepare it for a period of time, not a point in time. And the period that we're looking at for this particular statement is a year. It's for the year ending December 31st, 2010. Now let's go and look at each component. We always start with revenues. All this statement has is revenues minus expenses, and that will get us to our bottom line of net income. So let's look at each item in detail. Net sales is a revenue item. So is other revenues. So total revenues is a total of those two items. Everything else in the statement are either totals or expenses. Let's look at each of these in detail. Cost of goods sold is a expense. This is very hard for students to remember because it doesn't have the word expense in it, but cost of goods sold is an expense. Cost of goods sold is a term we use for the cost of items that a company sells. Let's say that, again, I'm going to use an example. Let's talk about Walmart. I said earlier that if you could go buy a box of cereal at Walmart for $3.50, the sales revenue would be $3.50 for Walmart. Again, we always look at things from the perspective of the company. Cost of goods sold would be how much did Walmart pay for that box of cereal. Let's say that it was a Kellogg's box of cereal, so Walmart paid $1.50 to Kellogg's to buy that box of cereal. The cost of goods sold would be $1.50. Now, if that was the only thing Walmart sold and did during the whole year, you've already got your net income. Your sales revenue was $3.50. Cost of goods sold was $1.50. That would have given you $2 of net income. But companies do a lot more than just sell one item, so we've got all these other things to look at. Whenever you see the term cost of goods sold, you'll only see it for companies that have inventory. Now, total revenues minus cost of goods sold will give you what we call gross profit. Gross profit is a total, so it's a calculation. You take your revenues minus cost of goods sold will give you your gross profit. I said earlier that cost of goods sold, you will only see that if it's a company that has inventory. If you do a question and you don't see cost of goods sold, then you would not have your cost of goods sold or gross profit. You would move on to the next item. So you'll have total revenues, and then your next line item would be your other expenses. The next item we have here is our selling and general administrative expenses. That's an expense. Most expenses are easy to identify because you will see the word expenses in them. Again, it's an expense, and the next item is a total. We call that income from operations. How do we get that total? We subtract our selling, general, and administrative expenses from our gross profit. A lot of your questions, homework in class, and your quizzes, each expense will be detailed individually. So in our selling, general, administrative expenses, you'll say marketing expenses, advertising. You would list them out individually, and that would help you arrive at income from operations. The next one is our interest expense. Again, that is an expense, and income before taxes is a total. You get the income from operations minus interest expense is income before income taxes. Our next item is income tax expense, which is also an expense. And then to get at net income, we just subtract our income tax expense from income before income taxes. Like I said, if you look at each of these items, all you're going to see is revenues minus expenses is what you end up with as your net income. It's just that it's broken down into several sections. Sometimes you see this format, sometimes you just see its revenues, expenses all lumped together, and then you can calculate your net income. If you're doing homework in my accounting lab, you will see different categories. You can use that as a guideline where to fill in your information. If you're doing your in-class exercises, we'll just do it depending on how they want us to present that information. Be sure that you're comfortable with the items in an income statement and the format of your income statement.